In the first 10 minutes of the market opening on Thursday, April 25th, the shares of Kotak Mahindra Bank had sunk by almost 10%. The stock was trading at 1646 rupees a share by the time of filing the story. The reason, of course, RBI barring the bank from onboarding new customers online and issuing of new credit cards. The central bank has barred the private sector lender from new issuance due to deficiencies in the bank's IT system in 2022 and 2023. Although Kotak Mahindra Bank believes that these directions will not materially impact its overall business. In a statement filing to the stock exchange, the bank said, and I quote, "The bank has taken concrete steps to adopt new technologies to strengthen its IT systems and will continue to work with RBI to swiftly resolve balance issues at the earliest." The bank would like to reassure its existing customers of uninterrupted services, including credit card, mobile, and net banking. However, analysts believe that the RBI restrictions would adversely impact Kotak Mahindra Bank's growth. They expect that the restrictions will be reviewed upon completion of external audit and corrective action plan to RBI's satisfaction, which typically takes 6 to 12 months. Anand Dama, senior research analyst at MK Global Financial Services, spoke to Mint, and I quote, "We believe such restrictions should impact business growth, including Kotak Mahindra Bank's already dwindling CASA ratio and its new card acquisition. This will lead to earnings being hit in the medium term. Additionally, the regulatory overhang would delay any hope of a re-rating post the recent management change." But what about the investors? Should they stay invested? Research analyst Stocks Box spoke to Mint, and I quote, "We advise investors to be cautious in the short term and wait for the dust to settle before making new positions. For existing investors, we would advise to hold positions with key support levels placed around 1600 rupees a share on a weekly closing basis." Srinath Sridharan, policy researcher and corporate advisor, spoke to Mint, and I quote, "We have seen from recent RBI actions on HDFC, Paytm, and now Kotak Mahindra, waiting for 2 years and more to ensure regulatory compliance is a risk one can't afford. While regulatory supervision must be meticulous, delays pose a threat, especially with escalating consumer volumes. Consumer complaints on social media should prompt proactive action, ensuring RBI's oversight remains agile and responsive." Keeping in mind the volume of digital transactions in place, it is very likely that the duration of the inquiry scrutiny on the bank would continue for some time and the dust would take some time to settle. What do you make out of this entire development? Do you think RBI is correct in enforcing the bar on Kotak Mahindra, or is the measure too harsh? Please let us know in the comment section and stay tuned to Live Mint for more such updates.